The stock price of software company MicroStrategy soared *** after it announced in fall 2024 that it had bought $4.6 billion worth of Bitcoin. The company, later renamed Strategy, MSTR, saw its 2024 stock price performance climb above 650% by its November peak. For every dollar in Bitcoin it bought, Bro saw about a $2 increase in stock price. Investors seem to want Bitcoin exposure so badly that, in some cases, they were willing to pay double. More and more companies, from GameStop, GME, to Trump Media, DJT, are finding that buying crypto for their corporate treasuries can help boost share prices. By May 2025, BitcoinTreasuries.net reported that at least 118 companies had allocated some part of their business toward holding crypto. What critics find concerning about this strategy is that many of these companies originally had very different business models. Putting big cash reserves into a historically volatile asset not tied to their main business has definitely raised concerns. Let's break down why some investors are paying twice the price for Bitcoin exposure via stocks, why some companies are moving crypto into their treasuries, and what risks and other factors investors need to consider. Many investors prefer companies that put crypto in their treasuries since it provides easier and more flexible access to crypto markets than other options like ETFs. Crypto treasury firms usually have more flexible capital structures. This allows them to raise funds by issuing shares, selling bonds, or borrowing from financial institutions. Borrowing to buy crypto creates a levered strategy that might boost returns, but it also increases risk. If crypto prices drop, losses can become much larger. Although Bro's stock performance beat both Bitcoin and Bitcoin futures, the gap between those values has shifted over time. Buying crypto treasury stocks can also lower investing costs, since trading stocks often involves fewer commissions than other crypto vehicles. For example, buying or selling Bitcoin directly on an exchange may cost anywhere from 50 to 250 basis points. A spot Bitcoin ETF carries about 25 basis points or more per year in fees. On the other hand, online trading platforms like Schwab let you trade many listed stocks without commissions, and individual stocks usually don't come with annual fees. Although many investors see these crypto holding companies as a gateway to Bitcoin exposure, using a business that has nothing to do with crypto might feel questionable. Why would a healthcare or software company suddenly decide to focus on acquiring and storing digital assets? Some say crypto can work as an inflation hedge, while others argue the data just isn't. Crypto treasury companies generally follow one of two models. The first includes companies that shift away from their old business models to focus purely on a buy-and-hold strategy for crypto. The second model features businesses that adopt a crypto cash strategy alongside their existing operations to hedge against inflation. With inflation rising in recent years, some companies fear their cash is losing buying power, and they see crypto, especially Bitcoin, as a way to fight that. Even though many cryptocurrencies have underperformed, Bitcoin averaged nearly 50% in annualized returns over a 10-year span ending in 2023. Of course, past performance isn't a guarantee of future returns, but some companies still believe Bitcoin may outperform other business investments. Still, this outperformance doesn't necessarily mean it works as an inflation hedge. Nathan Peterson, from the Schwab Center for. But ultimately, the biggest reason companies are adding crypto is because people really want exposure to it. Investors are paying a premium for stocks in crypto treasury companies, so naturally, Bro and others are capitalizing on that interest. Before investing in any crypto treasury company, it's important to look closely at what management intends to do with both their core business and crypto strategy. The biggest risk? The price of the crypto itself, because it's highly volatile. If crypto values drop, the company's value might fall sharply too. Also, companies that borrow money to buy crypto face additional risks. Declining prices could lead to compounded losses, due to both the debt and the falling value of the crypto asset. These companies might be forced into a capital call, requiring them to raise more cash or sell assets. Crypto treasury companies generally follow one of two models. The first includes companies that shift away from their old business models to focus purely on a buy-and-hold strategy for crypto. The second model features businesses that adopt a crypto cash strategy alongside their